Ladies and gentlemen, welcome back to the channel. AMC stock is going higher by about 2% today, looking at holding up support around that 50-day moving average. Now, we're going to get into this interesting article, which says AMC 8-bet. Let's go ahead and pause that. Nope. This article says AMC 8-bet has handed 150% gains and 260% losses to traders. And let me tell you, most individuals are facing that 200+% loss. So we're going to get into this, everything that is happening here on the day today that you need to know. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. So first things first, let's get into this article. AMC 8-bet has handed 150% gains and 260% losses to traders. A seemingly sure thing bet on AMC Entertainment shares have turned out to be anything but, as some traders appear to have more than doubled their money, while others lost over 250% in just a few months. The wide range of possible outcomes is the so-called arbitrage trade underscores a truism in these kind of wagers. Timing is everything. An analytics firm analysis firm, data firm S3 Partners shows that simply shifting the trade day of the trade by 1 month made the difference between losing 200% and gaining more than 100%. Investors in the trade are buying the company's relatively cheap preferred shares, while selling the common shares short, betting that preferreds will be converted into ordinary stock. Over time, if AMC's plan is successful, arbitrators could see profits. But so far from hedge fund managers and other investors, this meme stock has offered a wild ride. The potential results vary so much in part because the gap between the securities in the trade has fluctuated widely. And since traders have to finance their trade, the longer it lasts, the more they can lose. Quote, some people think that when you do an arbitrage trade, you're locked in and will have a profit, said Ira Duansky, managing director and head of predictive analytics at S3. But you're not locked in on financing costs, which are eating into your profits every day, even on weekends. The analysis, which looked at trades beginning at the end of every month, since AMC issued the preferreds last year, found returns ranging from a loss of about 260% to a gain of about 152%, starting the trade on February 1st, could have resulted in a loss of more than 190%, while a month later, the trade would have more than doubled the investor's money. And let me tell you, most of these guys have been in this position since around that time, around February 1st, when this was first announced. Not looking so good for them. The trade stems from AMC's status as a meme stock company. It sold common equity to retail investors to raise money for acquisitions. Then it reached the maximum number of shares that its corporate charter allowed it to issue, spurring it in August 2022 to create preferred stock that called AMC Preferred Equity Units, or APEs. It sold additional APEs as well, and then saw approval from both classes of investors to convert APEs into common stock. Some common share investors objected to the way the approval process was put together and sued. The company negotiated a settlement, which a Delaware judge rejected last week. Then AMC revised its plan, and investors are now hopeful that it will win approval to essentially convert prefers into commons. While originally each APE share was meant to convert into 1 share of AMC common stock after the revised plan, the conversion will effectively be 1 APE share is equal to 0.88 shares of AMC. Racing against time, S3 Analytics assumes the trader was posting an average daily margin of 15% of the market value of both the long and short positions with their prime broker, recalculated daily to account for swings in asset prices with variation margin added or subtracted. The profit or loss calculated were based on the assumption that the conversion happened on July 24th and also included borrowing costs. The timing of any conversion remains unclear, and the longer the process extends, the harder it will be for many traders to profit from the arbitrage. But some investors can make money even if they unwind now. In March, all these trades were profitable, S3's Duansky said. It's only later that a lot of these trades became unprofitable. The longer this thing goes, every single day, including weekends, are making it harder and harder for these guys to profit, especially with what we've seen on Friday and on Monday. It looks even harder now to profit on this trade, even as AMC stock currently sits at $4.61. A lot of these guys have been short since AMC was in the $3 range. And considering Ape, you haven't made the difference in Ape, right? Ape has not done so well also when AMC has went higher. So it's not like your long position in Ape has done better than your short position in AMC. They've effectively both lost you money. If you include the cost of borrow fees in there, it looks even worse. Cost of borrow fees as of right now sit at about 150% from Interactive Brokers. Cost of borrow max 354% from Ortex. Cost of borrow average 280%. But I think one of the biggest stories lately with AMC is the option activity. Today alone, you're seeing 77 orders totaling $56.36 million, positive order value of 8%. The same thing is still happening, which this really doesn't make a lot of sense. Like, you're seeing $10 million trades here, $5 million trades, $1 million. Another $2 million trade right here. Well, like, why are you doing this when you're massively short in AMC? Why are you adding to your short position via these synthetic shorts, essentially, is what it is in the options market? That just doesn't make a whole lot of sense to me, considering how explosive AMC has been this week and will likely be, over the next coming weeks as well. Let me know down below in the comment section, why do you think there's so much aggressive shorting activity happening in the options market, aka so many puts being bought? Really doesn't make a whole lot of sense. Now, as we reported earlier in the day today, the reason the markets are going higher today is core PC price index month over month came in at 0.2%. That was in line with expectations, and this is continuing a really longer term drop in core PCE. This is the Fed's preferred gauge of inflation. So this going down is obviously very good. At the same time, personal spending came in better than expectations at 0.5%. You were expecting around 0.4%. Personal spending being good is good for the economy. It's a good sign for the economy, at least. And couple that with personal income that came in lower than expectations. I mean, that's really showing inflation's falling. People are spending money. Personal income is falling. So no wage price spiral. Looks like a soft landing because the economy is doing well and inflation's falling. That is what I would call a kind of Goldilocks outcome of today. It could have been a lot worse. Even the Michigan Consumer Sentiment Survey, this came in at 71.6. The first initial survey that we got for July came in at 72.6, so it's 1 point less. But June's Michigan Consumer Sentiment Survey was 64.4. Still a massive jump on a month-over-month basis. Consumers feeling better about the economy, about the way things are. Inflation expectations also, falling. I mean, that can set you up for a rally like we are seeing today. Now, next week's really going to be dominated by earnings, and I think that is going to be obviously the main kind of story next week. And markets are vulnerable if Apple or Amazon have bad earnings. If they have bad earnings, they could essentially crash the markets. That's almost 20% of the weighting in the markets. And if that, were to happen, that would be a very, negative outcome for the markets. We'll have to watch and wait and see what happens, but there is that as of right now. Now, if we look at the Stonko tracker data, like we talked about in the last video, it's just not a lot of option activity for next week relative to what we're even seeing this week. So you also want to see how many of these options roll over to the next week's option expiration, but specifically August 11th. By then, hopefully you get news from the courts. If you do, you should see either a lot of calls or a lot of continued puts run into this option chain. And considering there's only 30,000 calls on this option chain and 120 or so puts on this option chain, 100,000 contracts in either direction could move the stock around quite a bit. So there is that. That's really all we have. The 50-day moving average is serving as the level of support here on the day today. That's sitting at about $4.60 per share. That's right where AMC is at. Stock's up 1.77% today, even considering all these synthetic shorts that are taking place in the options market, not to mention just the overall shorting you're seeing. The stock up almost 2%. very encouraging. Now, you have fallen quite a bit recently. If you hold support at that 50-day moving average, looks like you could start to make a slow and steady upward move. And then again, it's all going to come back to the courts and what they ultimately, rule on this. If we get a ruling that is similar to what we just seen, well, that's going to mean, AMC is probably going to see another big rally. If you didn't have long position in AMC in form of options, or maybe just not enough shares you wanted, to have into this volatility event, which potentially could send AMC stock up dramatically from here, well, now's a good time to buy. Now, even on the adverse argument of if the courts rule in favor of AMC and let this split go through, on the other hand, it's going to take bankruptcy risk off the table. AMC is going to be able to raise billions of dollars with only diluting the stock just a little bit relative to what we have seen in the past. I could also make a very strong bull case there as well, that's actually a very positive event the markets are not looking at as of right now. So I really don't care either way this thing goes. I think it's positive for AMC. We'll see. Ultimately, the judge did not let this go through, so that has been the overarching thesis as of right now. We'll see what happens. Wouldn't even surprise me if we get a ruling on that today in after hours. Now, as far as AMC, you are on the threshold securities list. That has been that way for weeks, I believe like a month or so now, and not too much has actually changed. Now, today, looks like about 331,000 shares are reportedly being covered on, and your short interest is around 29.32%. I think this ruling is probably going to be the final ruling, and it'll be dismissed with prejudice in the court. So we'll see what obviously that could do to AMC. We kind of got a taste of that last time. AMC rallied to $6. If it gets dismissed the final time, it could be much larger than that, or vice versa. Even if you do get this approved by the courts, based on this drop, it's probably priced in to a decent degree, so I wouldn't expect as large of a drop, obviously, as we've seen so far. It could actually give you that upside move, in which these puts, they're going to get blown up no matter which way you put it. Obviously, hedge funds institutions are fucking retarded, and they don't see any of this information in front of their faces. Honestly, I wish they would watch one of these videos so they could, kind of get a better feel for what's going on with AMC, because obviously they have no idea to begin with. But nonetheless, let me know what you guys think about all of this information down below in the comment section. We did make some trades today, playing some earnings for next week. If you guys want access to my trades every time I make them, come talk to us, come communicate, come learn. Link down below in the description of this video. Most importantly, enjoy your weekends, and I will see you in the next one.